Felix here. If you really want to understand what actually drove the market today, why we went up and down like mad people, not because everyone's loony. Yeah, you can shout manipulation and that sort of thing, but it doesn't really help you to understand what's going on, right? This video will. Watch it if you enjoy charts and details and fundamentals. Otherwise, go and run off. Of course, none of the following financial advice, you know that by now. Let me show you here. We're going to start off with a fair few charts. So if you're, again, afraid of charts, I'm sorry, this is not the channel for you. This is Gamma. What is net Gamma? What on earth is he talking about, this strange options trader with a large scarf? Well, if you have very negative Gamma, and we have about $1 billion worth of negative Gamma, it means that volatility is very, very, very high. In a calm market, you're sort of up here. So what does it tell you? Well, we essentially have a real support line at 3,600. We went dipped slightly below that on Friday, and then after that we fired back up again. We saw exactly the same thing happening today. It's becoming quite nice and predictable. Though if we do manage to rally ever over 3,800, then you are going to see some fireworks, at least for a little while. Now, going back a little bit more fundamental, Fed today, Vice Chair Brainard saying the Fed is attentive to risks of further adverse shocks, where that market moves could interact with financial vulnerabilities. He said that and the market rallied. Why did it rally? Because it's sort of implying the Fed is thinking we might break stuff. If we break stuff like a certain Swiss bank, then we're going to have to do something about it. And look what happened in the market today. Two things happened around about the 1 o'clock time. Well, first of all, we managed to break slightly below the 3,600 support level. That fired off some, algo buying or backside covering rather. And secondly, Fed gave us that, we might intervene comment, and the Germans, the ones with the big D, I'm German if you didn't realize that, did a little balloon floating today. They floated the idea that they might raise more debt as Europeans together, like the federal united Europe that they sort of aim to be, which is not usually German policy. And the market saw that. Bonds for Italy and so on rallied, and then they denied it a couple hours later. And the denial is what the markets liked. And that happened pretty much at the same time. So we've got this nice spike, three factors here together. However, why do we get that rally and we don't get terminal rate expectations coming down? Terminal rate expectations are precisely what it says on the tin, where interest rates end up, right? The market is expecting at present a 4.7% interest rate. Ouch. That hurts. That hurts particularly growth stocks. For every 1 percentage point that goes up, your growth stocks lose about 9 to 10% of their value. That comes from discounted cash flow models, the way analysts put a value on stocks. PayPal, and then we're going to look at earnings season, because this is about to kick off and this is about to get serious this week. I call this the dumbest move ever. PayPal basically said, we've altered our terms and conditions, and if you spread misinformation or information that we deem to be misinformation, we will fine you $2,500 because we are the global police force on free speech, and we will take the $2,500 out of your PayPal account without really you having any recourse here, unless you'd like to take us to court, which will cost you more than $2,500. So just utter idiocy, the dumbest thing I've ever seen from a payment provider. And there has been a huge social media campaign for people to close their accounts. I haven't gone that far because I have a lot of people that use PayPal from my students. But yeah, I totally get it. It makes no sense, absolutely idiotic. So the stock is down something like 6%. And as if PayPal needs this, right? This is a stock that's been decimated. Fundamentally, I still think a brilliant business, but obviously either their legal eagles are idiots because they basically said it was a mistake. Yeah, right, you amended the terms conditions and then you accidentally fell asleep, knocked the enter button and realized it later when there was an uproar and you said it was a mistake. Come on. Anyway, this is less of a mistake. We've made 109% return so far this year on my options trades, which I've shared every single one of you of them with you in the community. So if you want to learn some more about that, stick around. I'll tell you how to do that in a second. In fact, I'll tell you right now before we get to earnings. If you have a 5-figure portfolio or larger, 5, 6, 7, 8, 9. We've got quite a lot of 8-figure people. We've got one 9-figure person. That is a little bit rarer for statistical reasons, although it doesn't have to be. FelixFriends.org/coaching. Book a call with us. We'll have a chat. We'll walk you through it and see if this is the right fit for you. See whether this protocol that I've developed that is making me these returns year in, year out, can do the same for you. It can if you have, a head and 2 eyes and 2 ears and that sort of thing, and you're not insanely emotional. That would be really the only caveat there. So check that out. Let's move on though to earnings. Morgan Stanley giving us some wisdom here today, saying there is a double whammy of inventory oversupply and slowing demand that creates risks, particularly acute for consumer retail and IT hardware. Which is why I would avoid those. Generally speaking, I would also avoid those from a trading point of view for earnings season for a while, because it could be that somebody like Target comes out and go, yeah, we've got oversupply and everything. It's all kind of bad. But the market goes, but it's not as bad as we had feared, right? And that's kind of what happens sometimes. So very, very unpredictable, this earnings lot. I would be careful with that. Second, unpredictability. Well, actually, this is fairly predictable. The US dollar has been rallying like, I don't know, somebody on the run. And this is the US dollar against a basket of currencies. It's, the main index we look at, US dollar currency index. This is 2019. This was 2020. And this was beginning of 2021. 2022 starts here. And you can see what's happened, right? So this rally here is about 25% up against a basket of currencies. So if you are Microsoft and you're selling your lovely subscriptions in euros and in pounds and in yen and in, all the sorts of currencies, you're getting 25% less money, approximately. What does that mean? It means your earnings kind of suck, because the majority of somebody like Microsoft's earnings come from overseas. So who's going to do well in this earnings season and has done well this year? Basically domestic businesses, US domestic businesses. Now, there are not that many of them, but there are obviously some. But who's going to suffer particularly acutely with all of this? Well, it's the most international business. It's your Netflix, it's your Microsoft, it's your Apple. It's those kind of guys who just are everywhere. PayPal, for example, also, they basically get that problem. Now, where are we going to head to for the rest of the week? Well, this is again, sorry to go back to options. It's what drives a lot of the market. Understanding it also makes you a better stock investor, quite frankly. The VIX curve going forward should look like this. Why? Because in the future, there should be higher risk than right now, because you should understand the now when you do not know the future, unless you have one of those crystal balls, in which case, please send me one. Put it in the comments down below. It's doing the opposite at the moment, once again. And what does that mean? It means unpredictability is predicted. And yeah, that's a strange thing to predict, isn't it? But that's exactly what's happening. So lots of ups and downs every single day. Watch out for that. It's going to continue. Rail unions, one of them has rejected Biden's strike busting whatever, rail strike thingy. And that's not good news, because that could bring, again, another bit of insecurity and unpredictability in there. In our coaching community, I think Elliot summed it up very nicely, one of our amazing coaches. And he said the 200 WMA line held up last week. That was the support here. And that was partially responsible for the relief rally we got. There were also other options things. And he said, we haven't seen a substantial pickup in call buying, which means the market is still nervous. So nervousness is what we see. And watch out for CPI. That could make the end of this week, the start of something big in either direction. Yeah, that's pretty much as good as the guidance as you're going to get. So how can you make money on that? Well, you can make money on that, actually. You can set up an options trade, which makes money on the stock moving wildly. You can make money out of everything, as we continue to do. So if you're interested in 109% returns, getting that extra income stream in the way I do it, I literally spend about 3 hours a week trading options. It's incredibly low time intensity once you get the hang of it. We guide you through it. We hold your hand. We do everything on the coaching program, except trade for you. You have to do that yourself because we want you to be independent. We want you to be able to do this for the rest of your life without us. Check out felixfranz.org/coaching, 5-figure or bigger, 6, 7, 8, 9, 10, and so on. 10 would be fun, wouldn't it? And if you're not quite there yet with the 5 figures, we have a program for you because I think it's incredibly important to accelerate the starting journey of investing. And that's super exciting. It's amazing if you're in that space. This will, again, help you to build that extra income stream, 100 pre-recorded lectures, my full protocol strategy laid out for you. You get to see me trade live every week. And there's a wonderful, wonderful support also in our live chat groups from our team. So check it out, felixfranz.org/options. Write down that coupon code FREEDOM. I believe that expires today. Is it today or tomorrow? I'm not sure. But it's in the next couple of hours. So don't hang around for too long. Thank you very much for watching. If you enjoy these kind of slightly mad macro updates, I'd love it if you let me know in the comments down below. If you have any questions on anything, literally from, Gamma to VIX to all the wonderful weird things that actually underpin the market, then put it in the comments down below. I'll reply every comment. Thanks very much for watching.